Welcome back to the Talking Hedge. I'm Josh Kincaid, and this is your Cannabis Business Podcast. Today, we're going to be talking about cannabis finance, IPOs, RTOs, ETFs, and everything that is publicly traded. On the line with us is our CBD correspondent, Dan Chemist, with good CBD products. So today's Capital Cannabis Raise is brought to you by the Marijuana Business Daily. So this article dives into the desire for access from investors in cannabis. So apparently it was the second largest week so far this year in terms of the amount raised in the North American cannabis industry, as more investors are looking for ways to access the new cannabis industry. So it was boosted by a $575 million raise on the NEO exchange in Canada. And the total amount raised last week was $862 million. So equity raises accounted for the largest portion. Equity is generally you get voting rights. So there's debt and then there's equity, and that's typically the standard stock that you receive. And so equity accounted for the largest portion with $853 million. The total amount raised in the cannabis sector year to date is $8.5 billion, nearly double that for the same period last year. And so looking at 2019 capital raises by the type and the week last week, the top raises that closed in terms of the amount raised, the largest transaction closed with $575 million by the New York-based Subverse Capital. They formed a special purpose acquisition company. That's like blank check company, basically. So the price tag was not only as large as many others that raises. There's a $7.7 million Series A fund by ArcView that we talked about a couple of days ago. And that was basically just to get the founding people out of the way. And so one of those founders was with the MJ Business Daily, and the other founder being Steve D'Angelo with Harborside down in California, who just went public and probably is too busy to do too much. Other top M&A deals that closed last week is Mojave Jane, a California cannabis group that acquired a 21% equity stake in software technology and cannabis delivery company 2083 Group. And then there was a Toronto-based MPX International company that had acquired a 20% stake in video platform group Kajinga Cannabis for roughly 250,000 Canadian dollars. That's pretty small compared to a local company. I don't know if you heard about this, Dan, but Zoots just sold to Ionic for $11 million, including a $600,000 debt payoff. And so that was surprising to me because High Times just bought Dope Magazine for $11 million plus $2 million in debt. Dope Magazine had branded concentrate and oils. They had a significant online presence. They had a huge dope cup or cannabis cup. So their events were very popular. And yet this manufacturer of edibles sold for just as much as a huge multimedia company. So I'm a little concerned that there's a skew towards more traditional valuations as it pertains to Dope Magazine and the media companies, and maybe more of a speculation bubble on manufacturers of CBD and THC companies as we're seeing in Zoots. What's your take, Dan?
Well, Kron, as somebody who's, how shall we say, close homies with both units, right? Mm-hmm. One of the things that's kind of interesting is the nature of, again, being a media company that's doing all of those things, or being a cannabis, producer processor, in this case processor, and then that lens, right, from an investment standpoint, in that, again, right now the hot trick at the dance is the cannabis company, and in turn are cannabis related. And certainly you could make a clear case. You'd say to me, well, wait, but Dope Magazine is right, but in the end, they are a media company. So I guess, to me, I would say this: good luck to both in that, again, how neat, 8-figure, sure, low 8-figure, but the over the 7-figure mark come in. That's crazy.
It is. So we'll have a couple of members from Zoots on the podcast next month at the World Trade Center on day one of HempFest. That's Friday, August 15th, I believe. And so we're going to be talking about everything that is edibles, including this newest acquisition by Ionic. So I'm going to be looking forward to that. And so, with all of this speculation, it comes as no surprise that a lot of these pension funds across America are looking for alternative investments, something that's going to bring them a higher return on their investment. Yesterday, we briefly talked about how broke the state of Illinois is. They're the 11th state to go rec, and the lens in which I look through in the Talking Hedge is through finance. And since Illinois is broke, their pension funds need a higher return. I believe it's around 7% or 7.5% just to break even on the overhead to run a pension fund. And that's ridiculous considering that a CD or savings rate on the money market is giving you 0.5%. How is a pension fund going to turn around and make 7.5%? Well, cannabis, I guess. And so it's speculative, and I wouldn't want my pension to be thrown into a real estate investment trust that we're seeing with American public pension funds investing in cannabis through a California-based REIT or real estate investment trust. And really, I think that's just because of the overhead costs and trying to recoup some of the losses that they saw 11 years ago in the financial downturn. That's forcing a lot of pension funds in California for the teachers' pension, which is called CalPERS, or in Illinois, you're looking at police pensions that are broke, teachers' pensions. And so maybe cannabis is the savior. I don't know.
Well, on the ground, right? So that's, one of the reasons I listen to the cast is because it's bigger than the ground. On the ground, wow, the taxation issues, the everybody trying to soak some more money out of the plant, right? Especially from a bureaucratic and regulatory side, is crushing. Again, things like the Washington traceability fiasco, things like suppressed cannabis pricing, the Oregon weed glut. Again, a space where there is a lot to know, no doubt.
Looking at an article that's titled How Investing in Cannabis Stock Has Changed and What to Expect in the Future, they talk about how legalization in Canada last year in 2018, there was a massive amount of speculation going on in the market when it came to cannabis stocks. Same thing over the counter in the US that we're seeing here. But the article goes in to say that everybody wanted a piece of the pie, wanted to be the next cannabis company. And so we saw a massive amount of IPOs and RTOs hit the market. Some companies exploded thousands of percent since their IPOs, which causes FOMO and more speculation. So now, unfortunately, a lot have started to trend downwards and struggle to survive. And during times of immense speculation, like we saw back in 2017, 2018, it's paved the way for a lot of these cannabis companies in the industry today. So nowadays, a new cannabis company that receives a lot of hype and PR, like Canopy Growth, is going to see some backlash, like with their CEO being let go. So in the current environment, we're seeing companies who are well positioned to take advantage of global expansion, first mover advantages. But for the average investor, there's better options rather than just diving into some speculation. Maybe look at a portfolio like an exchange traded fund or ETF. So when it comes to investing in the cannabis space for 2019, there's a new investor for large cap exchange traded funds like the Horizon Medical Life Index ETF, which seems like a good entry point for the novice investor to kind of get their feet wet while still allowing them to have a diversified ETF filled with the large cap companies. Some of the top 4 companies in Canada, they're all in there. And so from there, it'd be a good idea to take a look at the individual holdings within the ETFs if you want to do some more research, maybe get a little bit more speculative. And so there has been, to reiterate, a lot of stocks in the last 3-4 months that have been under fire. We saw the Marijuana Horizons Life Index increase to 45% from January to March, but there's been a cooling down period. And so as the cannabis sector matures and continues to open up with the edibles launch on its way in Canada, just around the corner in October, the past quarter, there's nothing pretty about a lot of these companies that we saw. And a lot of the large cap companies fell short of analysts' estimates. That includes Aurora and Canopy. CannTrust just lost their CEO today too because they were selling cannabis on the black market. The CEO knew about it for 6 months. And so overall in the industry, on the publicly traded markets, you're seeing losses mounting for many of those companies that are focused on trying to expand with technology and future market shares. Canopy Growth lost over $300 million in the first quarter due to higher employee compensation and a paper charge regarding the company's convertible debt. And so a lot of these losses highlight some of the growing pains that the new companies have to go through in such a burgeoning industry that's fast changing. And so what changed in March? Basically, what this article goes into, they think that there was a lot of investors that started to look at their portfolios. They were noticing that the cannabis sector outperformed this S&P 500 by over 3x at that point. And so the Marijuana Life Index going up 60%. Meanwhile, the S&P gained only 20. So investors started to shift their money into more defensive names. They felt that that pullback was imminent in the cannabis stock market after such a strong rally in the markets. And it turned out to be true as the market sector declined from March, only to accelerate after companies released one disappointing quarter after another. And so the massive 3-month bull run that was enticing enough investors to start selling their cannabis stocks before earnings were fortunate. And so in March, a lot of these large cannabis stocks peaked relative to the broader indexes, using the S&P 500 as an example. And so you really need to kind of look at that risk. So looking at an ETF, why should you look at an ETF instead of a regular stock? Well, according to Yahoo Finance, it's less risky looking at a broad portfolio instead of the high volatility individual stocks.
Well, Cron, here's the thing. What I keep hearing from you, and I think this is the real key point for the talking hedge, at least from my perspective, is, again, educated decisions, right? So I find myself listening to the cast and learning, my gosh, the volatility, and as an armchair expert, I don't think that's what you want to do with your money. I think you want to watch real experts and real expertise. And this is where, once again, brother, you bring it. I dig it.
A lot of interesting stuff this week, including the Senate meeting to have the States Act passed, which will allow individual states to act autonomously, maybe allow for banking. Either way, there's a lot of new referendums and legislation. So this industry is expected to blast off from an already robust $6.7 billion market to over a $20 billion market in the next 3 years. So stay tuned. With that, we're going to roll this one up. I'm Josh Kincaid. This is The Talking Hedge. Don't forget to like, share, and subscribe, or don't. And I'm out.